The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien.
Welcome, folks. We appreciate you growling and prowling with us out here. Right now, you got the Dow up 39, Nasdaq's flat, S&Ps are up 3.5, gold's off 530. Bonds, you got the 10-year down 7 ticks, 30 off 13. King dollar is up 17 ticks. And you can expect flat to slightly lower markets coming into the 2 o'clock time frame. That's when the Fed's going to come out with their announcement, their statement. The market is not expecting a short-term interest rate hike on this statement. What the percentage is on the September deal is that they are expecting the rates to go from 0 to 0.25. Bottom line, we'll see how that shakes out. What I do expect you are going to see, though, is that you're going to get some volatility as we normally do once this Fed move comes out. Inside the Dow Industrials, the Fed statement comes out. Inside the Dow Industrials right now, you get the Dow up 38. Putting strength into the Dow is Pfizer. That's up 54 cents. Visa is up a buck. You have Boeing up 168, and Verizon is up 52. Taken away from it on the way down, Caterpillar is off 126. You get DuPont off 53. Chevron is down 83, and you get Apple off 87. Inside the NDX 100, this is what we have happening inside the NDX 100. That is a flat market out here this morning. Citrix is up 531. You get Verstech up 541. We have Charter Communications, C.H. Robinson, rather, up 421, and you got Green Mountain up 316. Taken away from it on the way down, Akamai Technologies is off 525. You get Lam Research down 127. SBC Communications is off 159, and CLAC is off 72. Let me just see how these are lining up. That's interesting. Yeah, CLAC, Lam Research, they're in some heavy downdrafts there. Some of the Dow stocks. So what do we have? Big Blue is down 84. You got International Paper off a $1.38. Walmart's up 44. We go over and let's go take a look. Let's see, right there. Okay, so first we're going to go into the TLT first. The bond market itself, folks, okay, has been giving the most consistent information out for long periods of time. That information, inside the TLT, we came off the highs. Well, first off, what the bonds had done is they went straight up when we go back to January of 2014. The TLT was trading at 101. It goes straight up to the level of 138. Now, we have volume up at that level. That's what's pretty wild. We're watching this whole thing shake out. There's some good juice up at that level. We pull back, and as we had pulled back, what we had done is this. We pulled back right into where they actually broke topside. And the pullback was drawn dramatically lighter volume. We did, on a monthly basis, you did 238 million coming into 480 million. The real key here is that, okay, it didn't get to the low, which was 114. That's saying, guess what? We're going to make a run for that swing point, the swing point higher once again. We're teetering right on getting over. We hit 121.17 this morning. You get over 123, man, and this thing is going to go topside in spades. Now, the thing that's wild is this. So picture. When the Fed comes out with their announcement and their statement at 2 o'clock, you have the statement, and the way the market looks to be setting up is that they're saying, okay, we're not going up this month, and in fact, we probably are not going to go up in September. Because if they're not going up, if they were going up, folks, this bond would get smoked in about 2 seconds. It's not. That's the first part. What's also happening is that you have the dollar index that can't get any strength. Okay, so those two things there are basically saying that the Fed is going to put off going up on rates. That being said, we go over and we take a look at gold, okay? So let's pull gold up. And this is where the volatility, I expect, is going to be huge, in spades, all of the above. So, gold market, what do we have? Okay. The gold market, a week Sunday ago, gets to 1080. We have juice down to 1080. Big juice, too. We went down there, 260,000 contracts. We go down, we hit it again with 249. Now, that's nice. I like how it hit it again. The volume was heavy, but yet it was lighter. Okay, so I like how that's set up. This morning, what we've had is this. Okay, your first leg down this morning in gold does have volume. So it's like, okay, man, you hit 88. That's saying it's going to spike again and test that area. What I expect you're going to do is this. Let me pull this up so you can see what I think is going to happen here. This is, I love these days, by the way. You have to love these days, because what ends up happening is that you can speculate what is going to happen, and then you find out, and you either get, you're either right or wrong. Now, when we take a look at gold, we're at 1091. The first spike that came down this morning has some juice behind it. If we go back over to when we actually hit the 1072 on Friday, the high of 1072 is 1083. Look, I'm looking at that, I'm saying to myself, you know what? 2 o'clock comes out. What are you going to do? You're going to go down, you're going to hit 1083, and it's going to be really hard to break that down. The reason being, when we hit that 1083, even on the 10-minute on Friday, that was 7,400 contracts. I suspect what you're going to see, it's going to hit the 1083, reject the 1083, and we'll see whether we can finish out at 1090, 1104, somewhere into that range. The correlation, which is really interesting to me, is that my take is that the S&P we're going back to. And the reason, if we take a look at the SPY, what you're going to see inside the SPY, the longer that you're in a consolidation, the more information that it gives out. We've been in this consolidation now for 6 months. That consolidation, when you line the tops up to the bottoms up, all the forces downtown. So if I was a fundamentalist, I'd have a hard time wrapping my head around that if, in fact, interest rates aren't going up and the dollar basically wants to, gets a lower price, why, in fact, wouldn't the S&P go to the moon? Because of the fact that means quantitative easing and they're not going to go up on rates is going to continue. I don't know. That's the bottom line. But all those different pieces are going to be playing out here today. They're absolutely going to be playing out here today. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. Let's see. We need I get those charts on for you. 1 second. Hold on. I'll redo those charts. There you go. Whoops. There she is. MasterCard. Let's go take a look at MasterCard. MasterCard came out with numbers last night. That's trading flat, down 86 cents actually. Numbers go like this on MasterCard. They're MasterCard, the second largest payments network, said profit fell 1.1%. Expenses rose, and the strengthening of the U.S. dollar hurt earnings overseas. The amazing part, so picture this, folks. Well, this is, you're talking about DX. Let's just look at this for a second. I love how these companies, once they catch on to something, they'll hang on to it for quite a while, when, in fact, I can't say most of the time, but in this particular case, the bottom line, you're talking about April, May, and June. April, May, and June, folks, okay, that's the quarter we're dealing with right now. The bottom line is that April, May, and June, the dollar was not at 100. The dollar was at 97, okay? And down as low as 93. In fact, DX1, watch, if you take a look at this, the dollar the dollar was at lows versus highs in the last quarter. So, bottom line is that MasterCard and many other companies are saying, yeah, it's the dollar that's making that happen. But if it's the dollar, what had happened is this, and this could happen. It's saying a strengthening U.S. dollar is hindering profits outside the U.S., whereas MasterCard gets most of its revenue. Even as spending climbs, a chief executive officer said striking deals with retailers and increasing incentives as consumers demand better rewards for using their cards. Our business continues to perform well with good transaction and volume growth, particularly in cross-border. Operating expenses rose 16%. Bottom line is that if, in fact, these companies were putting hedges on when the dollar was higher, that's where huge amounts of money can be lost ASAP. And, we've all seen that many times. Yelp looks like it's going to go out of business. If we go over and we take a look at Yelp right now is, down $9. This is a classic, meaning in the amount of gaps on the way down. If you take a look at Yelp, Yelp is a one-way ticket. It's just gone from 101 down to $24. And if we pull this back and we put this on a monthly basis, we put this on a monthly basis, man. Yelp's going down to 16, break 16. See you later. See ya. Don't want to be ya. Dow Industrials up 45, Nasdaq's up 1, S&Ps are up 3.5, gold's down to 480. Gonna be right back. Stay right there, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. Let's go take a look at the IBB. So the IBB, folks, this is the biotech index. Has just refused to give it up off those highs. What you have, we did come off the high with volume, but you're still over the breakout area of that 374. You're at 381 right now. Now, what we are going to have is that I believe it's tomorrow after the close, right? Oh, yeah, it's the Amgen is going to be coming out with numbers tomorrow after the close. Amgen's trading at the 172.76 area. This little baby had wide price spread, had volume, had all of that yesterday coming into its highs. The high that we're talking about is the 173.60 area. And thus far, it looks that Amgen has a shot, 15 million, 24 million. Today's Wednesday. It definitely has a shot. It definitely has a shot to take that baby out with volume. And if that's what you get, that's going to be a heck of a run. The reason being is that this consolidation on Amgen, the top of that consolidation was 173. The bottom is at 147. You can add basically 35 points onto the 73, which you get like a 200 price deal there, and that's pretty intense because Biogen just went the other way. Biogen absolutely got smoked. Celgene, CELG, and the Nasdaq Biotech Index is what can rock no doubt the Nasdaq. Celgene is coming out. No, Celgene already came out. Okay, so Regeneron is another weighting structure in there. That's coming out the 4th of August. So bottom line is that that area there, that's going to basically dictate what's going on inside the Nasdaq and the composite. If we go take a look at a couple of the base metals. And what we had out here when I was even talking with our man, Mr. Andy Hecht, we are not in the same camp in the commodities and the base metals right now, that's for sure. But if we go take a look at Valley, V-A-L-E, right now you're at 550. Now, inside 545, 5.45, that's saying, hey, guess what? You can get some action here because what we did do is that we got volume, and nice volume, in this on the 13th of July. 13th of July went from 534 to 595. You did it with the 66 million. And when you're making bottoms, folks, they're basically, they're vicious, particularly after long downdrafts. And I've seen this a million times. Not a million times, a lot of times, okay? And what it is, you'll get the sign of strength. Then you give it up again. Now, as you give it up with lighter volume, and then you get back inside the range again, because that's just kind of how they like to be made. That 545 is crucial because what we also have up at those highs at 914 is you do have volume up at that level. Now, it's just not that. Okay, let's put this. Let me bring this through for a second. I want to show you how copper is setting up, because what I realized when I was doing the gold report is that we have a couple of copper stocks also. And copper, and I've seen this before, that base metals first will give you the first clue that, okay, we get some action. What we had with copper is that copper got off its low, and it was the first time that we had a nice sign of strength after a vicious downdraft. Now, copper went from 294, and the vicious downdraft I'm talking about got it to 238. Now, copper went a lot lower, went to 234, but the 238 area, we did 119,000 contracts on the 7th. We did 114,000 on the 8th. That's the flush out. You did a little bounce up. You pull back down with half of that, 64,000 contracts. You made a low with 49,000. I like that. I like that setup. Bottom line, copper's got to stay inside the 238 level. A couple of those copper stocks actually are looking pretty good. They came off the highs. Well, they did two different things. What they did is that they didn't break their lower swing points first off. And on top of that, what ended up happening is that they did have a nice sign of strength, and now we'll see whether they can get some follow through. That's how these are setting up. Dow Industrials. Right now, Dow is up 51. Nasdaq's down 2. S&P's, let's see, up 4. Gold is down 440. Bonds, you get the 10-year down 9, 30-year down 18. Stay right there, folks. Come right back.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. 877-927-6648. Let's go take a look at the transports, folks. So the transports, had a heck of a bounce here. If we pull the transports up, what you're going to see, this is a sector that no doubt was devastated. Right now, you're up 86 at 83.64. Put this back for a second. Put it on a daily. What you have here with the transports got down to that October 2014 level. The high of that level is 81.69. We got down to 7,900. Now, we're bouncing off of that level, and when the transports did hit that level, they hit it with lighter volume. Now the key is going to be, okay, how do you get into the price of approximately 8,500? Right now, you're at 83.67. Now, inside the transports, when we talk about strength versus weakness, the big strength out here today is CHRW. Okay, so let's take a look at CH Robinson Worldwide first. What we're going to look at with CHRW is that this is a huge trucking company, okay? Bottom line is that they're all over the world. You talk about North America, they're literally all over the world. And the logistics company. So in that case, you're up $3.12. This is an equity that has been in a consolidation. And the last, this can go up. If we take a look at this, we'll put this on a weekly basis. This certainly is not an equity that got killed like the rest of these. So can it get up into the 77 mark? Yes, it can. That being said, now let's go start taking a look at some of the rails. And what you're going to see is that the rails still can't get any traction. If we take a look at Union Pacific first, you're up 2 pennies today. You did have a sign of strength yesterday. Transports did really well yesterday. You went up with 7.5 million, but guess what? This saw another ABC down. It was down with 13 points on the way down. This equity here took apart the October 2014 level, and thus far it is right at the bottom of that level. Now, what the difference is, and this is where the danger lies, is that when this came down to the October 14th level, we came down with real juice. The October 14th swing low on a weekly basis had 37 million. Well, we did 35.8 million last week. So this is going to take a lot to basically get up into higher price. The airlines, if we go over and we take a look at, we can look at Delta Airlines first. Well, United's getting smoked out here. CNW. Conway Transportation. This is interesting. It's the trucking business inside the transports, folks. The trucking business is what is putting strength in them. The airlines and the rails still have a problem. When you look at Delta, Delta's trading at $45.10. You know, and that's really still at the highs. So Delta's not a bad setup, actually. United Airlines. We go take a look at United Airlines. Now that little baby, whatever they're doing, they have some monster problems, and more than likely they just took over the dog, and just couldn't handle it. United is off the highs of 74. You're at 57. That October level, the high of that was 45, and we made to 49. So United Airlines is showing that it's not done on the way down just yet. You know, we'll see what, in fact, is pushing that or is going to try to push that into lower price. King Dollar, still no traction out here on King Dollar. The E-minis, if we go to the E-minis have just taken out intraday swing points. So let's see what the E-minis are looking like right now. E-minis are trading out at 2093, and okay, so 2 days. We just took out the 93.75 this morning. That first print was at 720 this morning. Let's see where, I don't have my phone with me right now, so that 10-minute chart. Well, the real key is on this 10-minute is that can it hang over the 2093.75? You know, we'll see if it can do that. If in fact we do that, what you're going to go after is the high that was generated out here on the 24th. The 24th, that high there was the 103. You know, so we'll see whether it gets any juice up into that level. We take a look at the SPY, the SPY. What we have with the SPY. SPY right now is coming into the exact same swing point. SPY. That's just. SPY is coming into that swing point. And the SPY doesn't have the juice. Yeah, so this is going to get intriguing watching this shake out. We just did, on the last, the 10-minute bar just finished. That was 3 million shares on the 10-minute. And what you need out here, man, you needed, well, you didn't need that. You need 3.4, 3.5. So that the 3 million is not bad. The real key is going to be, can it stay over that level? It would make sense that it would try to get up to the highs of Friday, which was the 210.37. We've made 210.08 right now. What's going to be intriguing is that how it hits that 210.37, and do you have juice behind that move? Because what we're certainly going to have is that coming into the 2 o'clock area, the volatility is going to be out there, and we're going to get juice now, particularly because you get markets that are up now, right now, meaning the Dow's up by 78, the Nasdaq's up 9, S&P's are up 7.5, the DAX is up 43, the FTSE's up 52. Now, if you go look at the bond market is still rejecting lower price and has lighter volume. So that is saying that coming at that 2 o'clock announcement, the volatility is really going to go in spades. Now watch this. I got to put this up because see why when you have this shaken out and bonds refuse to die, which they've refused to die the last 10 years. Check this out. This is pretty intense. Okay, so your 10-year out here spike lower at just at 1030. That spike lower, however, had 22,000 contracts. Guess what? You're going into 38,000. Thus far, the 10-year has done 332,000 contracts, which is still going to be dramatically lighter what it's going into. So what that sets up is that bonds still want higher price. And this is so cool when you have setups like this coming into announcements. Dollar index, same setup in the dollar index as we started the program. Dollar index can't handle higher price. Right now, your dollar is trading out there at the 96.88 area. And, you know, it's trying to get higher as it tried to get higher yesterday. And you talk about a contraction. Oh, my God. I mean, you know, we went down on Monday with 48,000 contracts. Yesterday, you go up with 24,000 contracts. Today, you know, we should do at least 24,000 contracts. Inside the Dow Industrials, the strength inside the Dow right now is Verizon. Verizon is up 76. Pfizer's up 56. Boeing is up 209. You get Home Depot up 144. Taking it away, you get DuPont down 50. Caterpillar's off 71. Apple's down 41. And Intel is down 7 cents. Inside the NDX 100, Akamai is the culprit out there today, down 526. AFCO is down 230. Lam Research is down 118. And you get Checkpoint Software off 111. Going to be interesting. Some of these gold equities look like they're trying to get a little traction. If we go over to the Rheingold Resource, Rheingold right now is up 51 cents. Well, it's going to need more juice than this, but bottom line is that it's refusing a lower price at this particular point. What Rheingold has done is this. When these equities just teeter, you know, right at their consolidation points, it's pretty intense. And the Rheingold price point is $58. You know, we came down to 57.06 this month rather, rejected it. We're going to have lighter volume because we're almost to the end of the month. The real key is going to be, where does this close? You know, because Rheingold, you have two different places that it's been trying to get into and has got into. Both of those places have to do with strength. When Rheingold went topside in September of 2009, it started out at 56 and went to 76. That's what we're backing into. 40 million shares is what it did on a monthly basis. Last time it was down here, it did 25 million, which was in October. We're going to do probably only about 15 million, which is pretty cool. It's because the test would be 15 versus 25 versus what it's going into, which is 40 million. So if you do reject that lower price, you can see how that setup is. That setup would be that there's no more sellers down at that particular point. Now the key, of course, is that do we have buyers inside that market? We go over and take a look at the NDX 100, like the Qs. Qs right now, anemic volume. I mean, this is anemic, folks. Yesterday at this time frame, we had already done 12 million shares. We're at 6.2 million shares right now. That is anemic volume in spades. That, yeah. In fact, the Qs, now this is a heads up. The Qs don't look to me like it's going to make it over the highs of today. On the open, we hit 1152, 111.52. With the market up like this, the Qs can't even do it, which is pretty intense, you know, which is absolutely a change of tune inside that indice. Small caps, same type of setup. Small caps, you had some juice yesterday, but what the small caps are going to generate out here on a weekly basis is a spike low that has volume coming into the last spike low. Thus far, we've done 96 million shares. It was going into 185. So the way that is set up is that the small caps, the IWM, is actually going to, probability-wise, when we add up Wednesday, Thursday, and Friday, is going to have more volume as it broke that swing area. And what that sets up a test of that lower swing point. That's how that baby is setting up. ExxonMobil, because the ExxonMobil, that took off yesterday with volume, by the way. Today, up 35 cents. And you got a nice counter trend bounce going. There's no doubt about it. You will see where this shakes out. Exxon has just gone from 104, you know, down to the 80 price point. Chevron CVX. What do we have with Chevron? Same type of setup. Chevron had gone from a price point of 100, well, actually more than 110. Yeah, went from man, these are some retracements. 135 down into the 88 area, and you do have bounces going on in that whole area. The crude oil numbers come out, and the way these numbers come out, I can give you these numbers. Crude is up right now. Let's see what they're saying. Okay, oil rebounded, racing a loss after U.S. crude stockpiles unexpectedly declined. Inventories fell 4.2 million barrels. Energy Information Administration data show an $850,000 barrel gain was forecast versus a $4.2 million drawdown. You know, and we'll see how that shakes out if in fact it can hold. Inside the commodity market out here, lean hogs is up. They're up almost 3%. Sugar's up 2.9%. You have crude up 1%. Natural gas is up 0.6. The grains, you have the wheat down 1.6, corn's off 1.1. The gold market is really flat, down 0.3%. Gasoline is down 0.3. Copper is up 0.1%. Dollar can't hold higher price. This is, I suspect, we're gonna see some really sweet action as we come into this 2 o'clock time frame this afternoon. What's going to be intriguing is that what their excuse is for not going up on rates. I suspect what you're going to have is that when we look around the rest of the world, the rates are still dramatically low. And it's like, okay, so how are you going to go up, or why do you want to go up? Because when I look at the rate structure, the rate structure that we're talking about is really only the rate structure between the Federal Reserve and their banks. And it's like, so they're going to go up of their own banks when no one else, think about this for a second, no one else, folks, can get 21, 25 basis points money. You can't even get 2% money, 3% money. Never mind 25 basis points. It's only the banks. It's the Fed to the banks. This is Tom O'Brien. This is TFNN. You stay right there, folks. Come right back. Dow's up 89. Nasdaq's up 9. S&Ps are up 8. We're going to be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow right now is up 89. The Nasdaq's up 11. S&Ps are up 8. The indice volume out here is running like this. You have light volume in the Dow. We're at 219 million right now. On the Nasdaq, you're running at 477. So they both basically have lighter volume. Inside the ETF structures, the SPY right now is anemic volume. You're talking about 22 million. We're at the 210.25 area. It's the 210.37. That was the high of Friday. That's what it's going after right now. The NDX 100, when you take a look at the Qs are running also with anemic volume. And the Qs are really weak out here, by the way. That's 6 million shares. That has a long way to go before we can get to the Friday highs. That's 113. It looks to me like the Qs don't even want to hold the 1135, which was the high of yesterday. Small caps having a tough time also. Small caps right now up 24. You're at 8 million. The high, you're at 121.83. The high of Friday is the 123 level. So that has a lot further to get up into. Dollar index, okay, and that's what you want to keep your eye on throughout the trading day here to see if anyone actually knows what is happening inside that Fed right there. What we have in the dollar index is this, is that we just got a spike down, and it's a good spike, too, if you want to see something that's pretty cool here. What you're going to see is that at the 1030 number, where the oil come out, the dollar went from 90 to 78. We're at 82 right now. That had some juice on the way down, which is intriguing, meaning 726 contracts. So we've only done 14,000. It hasn't got into the lows of Monday yet, but what it was trying to do the first few hours of trading out here is get into the highs of yesterday. Haven't been able to do that. So the way this is set up right now is that the low that was established on Monday, 96.36, at least is going to be tested. Between the dollar and the bonds, that is still saying inside this statement that's going to be coming out is that they're not going to go up on rates. That's how this thing is going to shake out. What is going to be intriguing is that if they don't go up in September, do they go up basically before the end of the year. You know, either they just write it off and say, okay, we're coming back at the January level. And what very well could happen there, that's where the market might turn around and say, you know what, maybe inflation is and can sneak into this marketplace. You know, my take is that inflation is already in it. We talked about it in the afternoon show yesterday, on my afternoon show yesterday. What is intriguing is that as you're shopping, keep your eye on this, because a few of the Tigers were bringing up examples yesterday, and they were really cool examples. And what they were specifically were the aspect of, if you remember when candy bars, first, you know, you had big candy bars, and then they said the same candy bars, and what they did first is that they kept the price the same, and the candy bars kept getting smaller. Well, yesterday, folks were bringing up the aspect of gallons of paint, and now 7/8 of a gallon of paint. Shampoos were going from 16 ounces to 14 ounces. That in itself, folks, is inflation. There's no two ways about it. You know, rent structures are definitely, rents are going up, and they have been going up. I can tell you flat out, just even on the fund. You know, every year, bottom line, the rents go up, and they're going up dramatically, not in the small amounts. This is Tom O'Brien. This is TFNN. You stay right there, folks. Our man, Mr. Basil Chapman's coming up next. Growling and prowling with you. Then we got Steve Rhodes, Dave White. We're going to be back here this afternoon, folks. Have a great one. Have a safe one. Look forward to speaking this afternoon. Go get him, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.